Welcome back, ladies and gentlemen. The price of BTC is down by about 9%, well 10% from yesterday's episode. And yesterday we did talk about buying and sort of certifying our long positions as far as trading the Bitcoin range is concerned. So yes, ladies and gentlemen, today is a little bit bearish, but you have to remember that Muna, aka Beyond 10x, I always stick to my narrative, and in yesterday's episode I did tell you that I'm going to be sort of planning out my long positions, and I'm still going to do that today. But I just have to let you know that yesterday's episode was all about emphasizing the point of dollar cost averaging. So ladies and gentlemen, as we continue trading, right, you guys are going to be finding out a trader's perspective, and not every trade is going to be perfect. Sometimes you might feel, ooh, this is the support, right, and then boom, it goes down. But this is the power of dollar cost averaging. You need to learn to build your positions, and in order for you to get the best trades, right, you have to be in uncomfortable trades. There's only going to be like a few times or situations where you are going to enter at the absolute bottom, and then you have like an instant reversal and the price direction goes in your favor. That barely happens. So I'm not really one of these cryptocurrency YouTubers that always give you mixed signals. I still keep my position. We have to test the liquidity to the upside, just like the liquidity to the downside has been tested. Oh, and by the way, from a market maker's perspective, right, look at this. Okay, there was a lot of stop losses here which have been triggered. This particular move is to trigger this stop losses which are sort of around this particular area. And guess what's going to happen in the next coming few hours? We are going to end up bouncing. And just think about it. If this was like a genuine bearish move, by now we should have been dumping like crazy ever since triggering these stop losses. So this is one of the reasons why I really believe that now we are sort of beginning to bounce back. And I did add to my position right around this area. You see, it could be a terrible decision, but it could also be a very good decision, because remember, I am dollar cost averaging. I am building up my position, and my play right about now is for me to sort of long this in order for us to go and test the liquidity towards the upside of this particular range. And the liquidity is around 40,000, 41 to 43,000. So that has to be done and tested before we can further go on dumping or even potentially coming back and pumping. Okay, so we need to grab the liquidity to the top side and the bottom side of the range. So from yesterday's episode, perhaps we could have found like a better entry, but there is no such thing as a perfect entry. This is one thing that you guys have to remember. There isn't anything called a perfect entry where you enter and then all of a sudden you have like a very good move. There's always going to be situations where you have to sort of create or make your perfect entry, and that only happens by dollar cost averaging and just sticking to the manuscript. Okay, so right about now, yes, things look like pretty bad. And to be honest with you, let me also talk about the bearish side, because that is a possibility. Yes, ladies and gentlemen, I have stop losses. Okay, my stop loss is around 26,000 US dollars. Okay, so from the current price all the way down to around 26,000 US dollars, that's around I've got like like a 15% price stop loss if we consider that. But I am sticking to this particular weekly TA where I am sort of leaning towards the support that was held around this particular area. So this is one of the reasons why we could potentially see the price of BTC by the end of the next 24 to 48 hours going back above 34,000 US dollars, even 36,000 US dollars, because this could end up being some sort of wick towards the downside, and then it closes above. That could happen. Okay, so the game plan is simple for me right now. I'm actually building positions on a lot of alternative cryptocurrencies such as Bake, the Graph, plus a whole lot of other different stuff. So everything that we talked about yesterday, I'm still going to do, and these things happen. That's why I emphasize that I will be dollar cost averaging in. And the power of dollar cost averaging in is you get a better price entry for your positions. So let's see how this support is going to turn out to be, because for the first time in a few hours, right, we are now sort of going above our range and creating a high on a smaller time frame. So if we flip over to the 10 minutes, right, this right over here is a change in the market direction. Okay, so there's going to be a point where the price is going to drop back down to around this particular price level, which is around 32,500 to 32,900. So this area is going to be tested as support. So once we get to sort of come back down and test this particular resistance turned into support, then I'm going to be adding some more position to this particular area in preparation for the price to go back within the range. So just like I told you yesterday, right, this particular trading range is going to be one hell of a trading environment, because by the end of it all, right, once we sort of come to the end of this particular range, you guys are going to be mentally exhausted. And that's what I told you yesterday, and it is factual. Okay, so yeah, more of the story is your boy Mona, aka Beyond 10x. I never ever give you two scenarios. We're still bullish in my opinion, and even though we are sort of testing this liquidity right over here, especially towards the bottom of the range, right, there is a very good chance for us to make money coming back within this particular range, and that is like a 22% price increment. If you talk about out, that's like a 40% price increment. Okay, and this is how trading goes, ladies and gentlemen. Always dollar cost average. Okay, DCA is very important. It's going to save you a whole lot of money, and it's going to make you a whole lot of money. So yeah, let's see how this one goes in the next few hours. And just like I told you, I'll be waiting for the price to sort of retest this particular resistance area turned into support. Then I'm going to add, so anything between 32,000 to about 32,800. I'm going to be adding to my position. I'm going to dollar cost average some more positions and just build up my sort of long, so that I can get like a nice juicy long. Okay, so let's look at accumulation graphs, accumulation candles or whatever, accumulation examples. Yeah, because this is important, because I want you guys to see exactly what I mean and how sometimes the price kind of goes in and out of the range. So yeah, hold on. Okay, yeah, let's take a look at this very good example. Okay, so for example, this situation, the price dips below the range, and it kind of goes back up. Okay, so technically speaking, I'm waiting for the spring. Okay, and looking at our current situation, right, if you look at the daily closes, if you look at the regular candles, because if I flip over to the line, right, You see, if we flip over to the line, right, this could be potentially a spring. If you look at the line, so hold on, let me erase, or rather remove the view up. Yeah, so basically the blue line is the line as far as the price action is concerned. So if we take a look at this, right, if we end up finding support here, this could be the spring that we're looking forward to. But if we flip over to the Heikin-Ashi candles, right, let's flip over to the Heikin-Ashi. This is what we're getting. So flipping over to the Heikin-Ashi, the spring hasn't kind of happened. I would expect the spring to be above 30,000 US dollars. Okay. And if we flip over to the regular candles, this could potentially be a spring. Okay. However, we still have these wicks to the downside here, right? Here, you see, so that hasn't happened yet. But looking at this line, it's looking pretty good. Okay, so this is why if we look at the accumulation, of course this took like a long period of time. This is like over a month, and this is like a daily chart. Okay, initially I was expecting the price to do something like this yesterday. Okay, I was expecting the price to like have like a secondary test and then go back up and test. You see, before the spring is met, usually there is some sort of liquidity test in comparison to the previous resistance levels. Okay, so that's when the spring usually occurs, and this is why I'm leaning towards the price of BTC sort of having a retest here before we form the spring. The price has to sort of come back in the range and go above this particular level, then have a swing failure pattern and then drop and create the spring. Okay, then we come back up and we continue pumping towards the upside like that, have a retest, and then go get out of this particular phase and then just continue going up towards the upside. So I really believe that we are between we're in phase B of the Wyckoff accumulation. I really believe we're in phase B. And today's daily close is going to be very fundamental, because technically speaking, we have to wait for the day to close, because this could end up bouncing back up and shooting back up, so that could happen. If that happens, then this particular wick doesn't technically close below the range of these particular wicks right over here, so that is a possibility. So that's why I'm not really trying to rush as far as creating my bearish narrative, because we still have like a few hours. We still have about 15 hours till this time frame sort of closes as far as UTC time is concerned. So yeah, that's what I'm looking at. That's what I'm definitely looking at, and yeah, we'll see what's going to happen. So far we have sort of broken the support line. Okay, let's flip over to this thing. So we could safely say, using the candle price analysis patterns, right, we could say we've gone below this particular support. If you look at it from all angles, if you look at it from that particular angle as well, we've gone below it. We haven't just gone below these extreme levels, so let's flip over to the daily, to the 3-day chart. So if we flip over to the 3-day chart, right, we still have a long way to go. We still have a long way to go. And remember what I told you yesterday, right? We still have like strong support from this particular fractal. Okay, this particular weekly candle right over here, this is a very decisive weekly candle, because from here we ended up pumping. Okay, so this is basically where a whole lot of value is contained, and previous resistance turns into support. So this is one of the reasons why I really believe that by all measures, if we stay above $33,000 US, then we're Gucci. We are definitely Gucci. So we could wick up and down, but it doesn't really matter. The most important thing is we should be above it. So if today's daily close closes above this particular area, boom, we're still Gucci, and the range is still in play. And if I can get in to like long a lot of these alternative cryptocurrencies at this particular level, right, and then we go and retest this particular liquidity, boom shakalaka, that's like a whole lot of money. So that's the type of scenario that I'm looking at. So in case we have like some more bearish patterns, then I'll definitely keep you guys in the loop. So just like yesterday's episode, I'm still bullish and I'm still building up my positions. I'm not changing anything, and I'm still sticking to the more highest probable time. And in yesterday's episode, I did tell you that it's going to like play out within the next 24 to 48 to about 72 hours maximum. So basically I still have time. I still have about 24 to about 48 hours remaining if we look at the 72-hour period as the most extreme time frame. So, you know, I hope you guys didn't really panic. I hope you guys didn't really freak out. I'm just trying to be the voice of reason, and I'm giving you a trader's perspective. The most important thing that you have to learn is, you know, most of the trades that you're going to be most profitable off of, you're going to be very uncomfortable. You know, like if you're trading and then you're comfortable like in a trading position, probably there's something wrong. Okay, so the best trades are uncomfortable trades. So yeah, be good, be vigilant, and always remember that this is not financial advice. You haven't paid me anything to like you know, sort of be mandated to give you like financial advice. So whatever you do, please do your own due diligence and only look at my material as alternative facts that you can compare and contrast with your own you know, factual analysis type of data situation. So yeah, just be, you know, be vigilant out there and always learn. Every situation, every market structure can make you a better trader. So always strive to improve and, you know, look at where you went wrong and how you can improve on your trade. So the biggest lesson that I learned from yesterday is I sort of got in early. And you know, I should have waited for today's close. I should have waited for yesterday's close. This particular candle, I should have waited for it to close, then make a decisive decision. Okay, so this is one of the reasons why today's close is very important. Okay, so it's never make premature decisions. Always wait for candle closes, especially on high time frames such as the 24 hours or even 12 hours, if you know what I mean. Because if you look at the 12 hours, right, the 12 hours, well, yeah, it wasn't looking pretty. Okay, so anyhow, it's been your boy Muna. Talk to you a little bit later. Bye. Subscribe and drop me a comment in the comment section below, and you know, just let me know what you guys are doing. Have you sort of lost in this particular trade? Did you dollar cost average? What was your overall strategy? Yeah, talk to you a little bit later. Bye.